is Bryce Knorr from Farm Futures Magazine. Welcome to a special edition of The Buzz, live from St. Louis on the first day of the Farm Futures Business Summit. This is something we do every year to bring farmers together from all over the country along with leading experts. And we also release results of our production surveys and planting intention surveys. But joining me is market analyst Paul Burgener. When this is your first summit, what do you think of it so far?
I'm impressed. It's a large crowd. Looks like folks who are very interested in being here, and the discussion that I'm hearing is very good. So I'm very impressed.
And it's a great location. We can see the Mississippi River from where we're standing here, and of course that's working in a lot of the discussions about the market. First, let's go over our survey results. We found corn production. Farmers raised a crop of 10.61 billion bushels this year. That's down about 110 million bushels from USDA's November estimate. Basically found acreage slightly lower, yield slightly lower. Not a big change, and maybe not enough to really shake the market much. Do you think that's going to have much impact if that indeed is the number USDA comes up with next week?
You know, I don't think so. I think that when we dropped those harvested acres down a little bit, I think there was some hope that maybe that number would go a little bit lower to really boost that market. But I don't think there's enough there to give us an awful lot of really good news.
Market really seems to be in a funk lately, selling off on weak demand. Prices look like they're trying to stabilize maybe ahead of the report, but seasonal trends don't look too friendly once we start moving into winter and even into early spring.
Yeah, you know, it looks to me like we're starting to say, gee, that demand isn't there, so we've got to slide that price back a little bit, find out where that demand is, and get the grain moving again. So the market is in some doldrums right now. Maybe it's just waiting for that report to come out. That's what we can always hope, is that it's there and something positive will come on the other side.
Of course, the other big number the USDA releases next week is its December 1st grain stocks estimate. That tells us basically how much corn was fed to livestock. It's always a tough number to estimate, and that could be the surprise if we get one, if that number was indeed stronger than some folks anticipate.
Yeah, I think it'd be helpful. Unfortunately, we didn't put cattle in the feedlots this fall, so those numbers are down in the feedlots through the fall. That may be a challenge too, to get that number to pick up and be strong where we'd like to see it.
Yeah, more hogs around, but the cattle are the ones that really chew through the corn on a big basis. For soybeans, really didn't find much change in terms of 2012 crop production, just down 2 million bushels from USDA's last estimate. Maybe a little bit lower harvested acres or yields up a little bit, but really no big changes. Beans started to really suck some wind here on news of Chinese cancellation and exports that were weak over the holidays. Now, it's not unusual for exports to be weak over the holidays, so you think this is the start of a trend or just an aberration? Well,
I'm hoping it's an aberration. We've seen a couple of big sales this week that have been reported back into the Chinese market. You know, they canceled some sales when the price was up and came back in at a little bit lower price. So hopefully it's just a blip, and we'll get back to moving some beans to China, and the price will reflect that.
Again, the seasonal trends for soybeans don't look friendly once we get past this January report until spring or summer when the U.S. could run out of beans, but then the market seems to be anticipating we're going to import them from Brazil, so what me worry?
Well, there's something to be said there. You know, and the Brazilians are starting to get some rain. It looks like maybe that big crop they're telling us is going to come out of there might actually be there. So we may have missed our best shots on some of those soybeans.
Now, there are some O-crop marketing opportunities, particularly for beans. We saw the basis screaming this week, up 25 to 30 cents a bushel in some locations due to the weak futures prices. Farmers are not selling. They haven't opened up those bin doors to make sales for the new tax year. So we have some basis opportunities for both corn and soybeans, but particularly those beans. Do you see anything else out there that farmers should be doing?
You know, we've just been hesitant to do anything. Right now, I think we're hoping to see that there's some good news in this report, and start to take a look at marketing the rest of that crop out, and then taking a look at where we're going with that 13 crop.
Yeah, certainly. That was the other end of our survey. We found growers plan to put in 97.75 million acres. That's up about 1% on corn. The bean number maybe even down a little bit, 76.9 million bushels. So our survey didn't find farmers going whole hog planting the 100 million bushels of corn, 78, 80 million bushels of beans that some people are talking about.
Yeah, I think there's a couple of things in there. I think on the corn side, it's still dry in a lot of the country where corn's got to go in there. And as I'm thinking forward in terms of planning as a corn grower, I may be a little hesitant to really push those corn numbers up if I don't have any subsoil moisture, and a little bit concerned about being dry again into the next spring. So that number wasn't, I guess, a surprise to me, but I know there's some out there who are thinking 100 million acres.
Of course, we spend a lot of time looking at where prices may be headed, talk about supply and demand, fundamentals, seasonals, technicals. What I'm going to be talking about tomorrow, however, takes risk management from a different approach and trying to really quantify what that risk is for the individual operator, and going through some marketing strategies and analysis tools for stress testing their marketing plan to show them how they can analyze, should I be making sales? What I've been finding is, indeed, if people didn't follow our advice to make some preliminary 2013 crop sales this summer and early in the fall, they need to be taking a look at doing that on rallies, at least to get 20-25% on the books, and then wait and see what the revenue protection crop insurance price will be.
Right, and I think there's really some opportunities out there. I think that as we move forward, we do need to start thinking about getting some of that 2013 crop marketed. The possibility still exists that we could get back up to those trend line yields, and we may see the best prices of the season here in the spring. So there's an opportunity to get some corn sold, some beans sold, and get in place anyways at what really are profitable numbers.
Right. The other thing, I think the biggest surprise over the past couple of weeks, other than prices just being lousy, was the lack of impact that the whole fiscal cliff drama had on the commodity markets. It really didn't seem to matter a whit to corn, soybeans, and wheat. Yeah,
it really didn't do much. The uncertainty was there, so the markets really didn't want to play. But what we really saw was a seasonal holiday market where trading got thin. The market struggled a little bit in there, but not really much from the fiscal cliff other than the uncertainty behind the market.
Well, we'll find out next week whether or not those institutional traders come back in to the futures market, as well as have all the USDA report numbers on the next edition of The Buzz.